Hello everybody, welcome back to another video. I'm Sino Shadian and today I'm gonna be talking about XAU on 5-minute chart. Today is 11th of June 2025 and based on price section I'm gonna talk about the entry points and all exit points. Alright, let's just dive in and begin the day. Market was in a cycle last day, a spike, then channel, and right now market is in a trading range, but in this trading range there are lots of things going on right now. So let me just explain about what happened last night. Yesterday I had a trade in the morning. I took this trade as a double bottom. I closed my position right here because these two lines I dragged it. I knew that this is going to be the first target, and as you know, this is in a spike. I talked about it in previous video. So the first touch, the second touch, third touch, and even fourth touch. And this fourth touch even is also the third touch of a smaller channel and also a smaller cycle into a bigger cycle. And if you know the price action, how does it work, and if you understand the market phase, how spikes enter into the channels and how channels just convert into the trading ranges. So if this is the spike last night, channel, the big channel, right now we are in a trading range, and you see it comes back up, touches the top of the channel and goes back down. Right now we are also into another cycle. So this is the whole general view and the big picture of the market. You see a spike, channel, after four touch in this specific case, breaks below, then creates a trading range in the middle, in the half bottom of the middle of the trading range, breaks above, touches the top. Right now what is happening? Okay, if this is the big picture, you would say, okay, let's just say it because market is going to touch this level. But let's have a closer look based on each candle bar, and because there are lots of other things going on here. All right, so last night market after touch the top of this channel, it created a spike. It's clearly, you can see it, first bar, second bar, third bar. This place channel couldn't hold and support the price for higher prices, and one specific reason is that because we had three touches here and also four touches in the channel, and also it broke from the top, it failed. And whenever market breaks from a level and then comes back down to the channel or trading range, usually it can't hold the other side, and other side can't in fact hold the price, and it's going to break from the opposite side. And exactly right, it happened. It broke maybe between how many points? I would say 100 points, and then it broke downside, came back down, created a spike. The spike was so strong, so this level couldn't hold the price, and another minor cycle just began. How did it begin? A spike, second phase, channel, okay, and it breaks from the top of the trend, and right now we have entered into the trading range, and the bottom, the beginning of the channel is an important place, and also the place where exactly price has broken the previous pattern is also important, which in this specific case the price broke this level, so market comes back up and touches it again. That's why this rally formed last night. Okay, so spike, channel once again. Now after it breaks, we know we have entered into the trading range. Last night I took this trade on 1 minute. From here I took it and I closed my position here because I didn't know whether this bottom of the channel or previous channel is going to hold the price or not, but this small trading range worth taking. So buy low, sell highs, buy low, sell highs. All right, what happened here was that market created, after this spike and channel, created a small trading range. It broke from the top, and we know that when channels enter into the trading range first phase, the beginning of the channel is the possible place to get tested, but market couldn't push the price higher, and there wasn't reason, and the reason is right here. Okay, market uh, rushes into this level and then comes back down again suddenly, so this beginning of this channel never gets touched. So market goes up, comes back down, goes back up with this beautiful rally upside, and then comes back down. Take a look at this here. I think there's a quite um, important note here. Lots of traders would see this candle here. All right, this is specific one I'm talking about, and from the beginner's eyes, this is a very good candle to take. Okay, this one, and also they take the trade. Let me show you what happened. They take the trade. Okay, market goes into their direction and it breaks all these levels, comes back down, and when they see there's whole dollars in their bank accounts, in their trading bank accounts, they would say, wow, that's a lot of money. For example, today was a frustrating day, it was trading range, I couldn't make money. Finally I have made some money, and also I have been able to cover some of the losses that I had today. So they instantly close their positions, but from professional eyes they still know that they are in a trading range. Down, up, down, okay, then it goes up. Now it's a good time to buy the pullbacks. And what if this becomes failed breakout? They see this, and lots of sellers who I think they are beginners would close their positions with profit this time. That's why this shadow has been created, because professionals didn't support them, because they knew that they are in the trading range. That's what has made this shadow to form. All right, and when I saw this last night, I took a trade above this candle exactly. So it formed the first entry bar, came back down, a small double bottom. You see, it's a double bottom, goes up, comes back down, goes back up. You could have even entered on this candle, or even you could take this pullbacks in trading ranges, since you can take the pullback in the opposite side of the direction. So if the trend is going up, when market pulls back down, you can buy the pullbacks. You can buy even this close of the bearish candle. However, this one is the middle of the trading range. I wouldn't personally take it, but because of this shadow, I knew that it is going to somehow, it's possible, so possible that market is going to touch this level here, because right now market is in consolidation, and nobody knows, neither sellers, neither buyers are eager to push the price higher or even lower. Okay, so that's what made this rally upside a very good trade, a very reasonable trade. Market came back up, touched the whole profit targets. And let me show you something also here. From this moment on, I'm gonna forward the charts bit by bit, candle by candle, because I think it worth considering and noticing to all these points. This rally upside is a two-leg spike. Let me write it. Okay, guys, pay attention carefully, because from this moment on, I think if you're an advanced trader, you need to pay attention to this. Market cycle tells me that this to rally upside is in a spike. Okay, and sometimes even smaller moves create a very huge rallies. So if this is in a spike, first of all, market first creates a very small channel upside. This is the channel. Okay, let me change this line's color. So 1, 2, 3 touches. It breaks downside with two legs. The first leg, the second leg downside on lower time frames, but to a professional eye, these two candles are just two legs downside. So it breaks from downside, then goes back up, creates a double top, major trend reversal. This candle was taking, comes back down, but since we are still in a trading range, okay, this candle also was taking it, okay, you would have been able to make money. And since it's the middle of the trading range, professionals always take profits. That's what happens. You could make money here. So right now, after this spike and channel, when the channel breaks, we know we have entered into the trading range. So to my eyes, this place is a trading range. The bottom of um, the bottom of this rally downside, and also the top of it. Okay, so okay, I'm talking about this. Okay, so this is a trading range. When trading range breaks from the top side, we know we have to measure it from the top to the bottom. Let me change the color. Here is the color, and okay, so I can measure from the top to the bottom, then see what happens. This is the place that market possibly can touch because this is a measure move target. Let me write it for you. Okay, MMT, measure move target, and let's see whether the price has been able to touch it or not. Definitely it has been able to touch it. Okay, it creates a very beautiful hammer downside. Okay, but we're going to get back down to it very soon, don't worry. But take a look at this here, this place. After this trading range breaks from the top side, it comes back down to test the middle of the range. Lots of traders take profit. Then what happens? Another rally upside begins, which to my eyes, this is another spike, because this is something quite informal. And this is not either an exhaustion gap, because we have been only into a trading range that has recently been pushed up by buyers. So sellers just get out, and now bullers come in. That's when I realized that this is a new cycle that has just begun. So first touch, number 1, and number 2, and number 3. Okay, so for now, let me just delete this part. So a spike, channel, after 3 touches, it breaks the first leg down, the second leg down. Now we know that we have entered into a trading range with the possibility of the bottom of this range to get tested. Look what happened, guys, here. If this was the channel, this is a trading range. After it breaks, corrects itself for 2 legs, the first leg, the second leg, touches the bottom of this channel, first push up, second push up. I think the and news, yes, news have been just released. I don't know, and I don't care what would be the news, what numbers get out. I never care. I still know that we are in a big trading range. We're gonna get back to it very soon, don't worry. So market 2 legs correction, then it starts going up. You could have taken this trade because this is a double bottom with this bottom, so it goes up, comes back down, goes up, comes back down. Then let's Just see what happens. A very huge rally upside. But is this a spike? To my eyes, no. Because we know that, I know that, we are still in the trading range. This is the cycle. A spike, channel, trading range. So from this moment on, which channel is also a part of the trading range, goes up, comes back down, creates a very small trading range for the half, below the half, and then it pushes upside. Now it is going back downside. Okay, so I can't expect this rally upside as a trading range. And there is also the second reason I can't consider this as a new cycle to begin. For a long time, from the morning, market has been in an upside trend, maybe for 7 to 8 hours. Now, market creates this huge volume bars with a lot of gap upside. So to my eyes, this could be the possible of the exhaustion gap, and it was taking the other side. And the reason is that exhaustion gaps are the sign of the trend reversal. Okay, so I wait patiently. Very beautiful bar takes place. Market goes sideways for 17 bars, and it has lost its momentum. That tells me that even because this was the top of last day and top of the trade, top of the channel also. Right now we are into it with gaps upside. It's an exhaustion gap. Now you can take the opposite side of the trade. So sell it. And you see lots of professional traders have sold this place, and see what happens. First spike, next spike closing near its low, and even the next bearish candle is even stronger, and the body gets bigger and bigger. What's that sign? This sign tells me that all this gap have been covered by a spike. So if this is the gap, the other side is in a spike and the beginning of a new channel. So sell high and put your stop loss here. You could have sold it right here. 1, 2, 3 risk to reward ratio. Okay, if this is in a spike, the spikes finish after 3 touches. First touch, second touch, and here is the third touch. And what happens in the direction of this spike? You could have even taken this trade since it's a double top. So below this candle, you could have put your sell stop, your stop loss above this candle. 1, 2, 3 risk to reward ratio. Beautiful, right? And what happens after that? 1, 2, 3 touch, market rallies backside, and it breaks the bottom of the channel, can't make it, comes back down because it's a failed breakout. 2 legs correction in the other side. This is the first leg, pull back. The second leg, let me write it. First pull back, first leg, the second leg, 2 legs and 10 bars. 1, 2, 3, 4, 5, 6, 7, 8 and 9 possible at least. Okay, so after these 2 legs, market creates a gap bar with the moving average 20 exponential moving average. Lots of traders short this place and they get stopped out by this shadow. But the thing here is that, let me zoom it a little bit. If this is in a spike channel, we have entered into a trading range with considering this as a failed breakout. However, this is not failed breakout, or if this has failed, that's because of the previous day's high. So yes, it fails, it comes back down, and right now I think we are in another trading range. This is the channel, and this is the last low of this channel from the major lows perspective. So this is a double bottom, and the adjacent pattern with this bottom of this channel. So this low, sorry, market pushes up, comes back down. So what do you think, guys? This candle has a huge body with shadow upside. I think right now we are still in a trading range, and as long as market is moving between these two level, we are in a trading range. Okay, and this channel is even a part of this trading range. So can I buy the pullbacks? Of course, yes. Why not? All right, this is how I decide. I'm going to just make a buy setup here. No worries. Okay, no worries. This is only for educational purposes. Don't worry. Market goes up, comes back down. Very good place to buy. I'm going to even add more to this volume to show that when you analyze market, it's okay to take the trade. So the first part market can touch is the top here. This is a minor trading range, and the bigger trading range is between these two areas. The first area is here, the second area is here. Right? So I'm gonna just put the first target right here to see whether it is going to take it or not. Nobody knows. This candle has huge volumes, but as long as we are in a trading range, you can buy the lows and sell the highs, or even sell this highs because this high, because this specific trading range, this small trading range, can a market can consolidate between this because this is a cycle, a spike, channel, trading range. Guys, right now, market is in from the big picture. Right now, market is in a trading range, which is the third phase of the cycle. Okay, and if it's in the third phase of the cycle, only buy and buy low, sell high, and even during this specific, let me just show you something. The bottom of this channel to the top of this channel, all this area is a trading range. See how beautiful it is. And in this wide trading range, there are other minor cycles. And if you understand the price action correctly, you can distinguish the differences. You can take the trades even in this wide trading range and in minor cycles that it creates in this trading range. So read the price action correctly. Each bar's move has a story, and people who say it's just a noise, they haven't understood the markets yet correctly. Thanks for watching video to the end. Don't forget to subscribe and like, and I'm going to analyze the market every day, so wait patiently. I'm gonna be with you, don't worry, and have a good day. And by the way, market is pushing right up. You see how beautiful it is? Have a good day. Bye.